How's it going, everybody? Hope you are staying safe out there in this crazy, volatile period of Bitcoin's trading history. Recently, it has been a whirlwind. It's been a bit of a down market, and trading strategies have been struggling for sure. If you can just look at the trading range of Bitcoin for the last while, ever since the bear market, you had general periods where Bitcoin would slowly move up and then down and up and then down. You had a few kind of big moves to the downside, but as you can see, nothing like what we've had right here. So we've had a crazy run up, which is, very fast. And if you're trading a strategy, you can't expect, unless it's a very low term time frame strategy, you can't expect the strategy to keep up with this crazy um, move to the upside. However, we have had a slow period of downside, and then another quick spike to the upside, and then another slow period of downside. So this has probably actually been, ever since the bear market, the worst trading time for Bitcoin strategies, just because the general momentum has been down to the right with quick stabs to the upside. And strategies will sometimes catch, like you can see right here on this strategy, it caught a quick move to the upside, and just as quickly it caught that move back down to the downside. And the thing with strategies is you're playing Bitcoin over time, over a period of time. And actually, this strategy has done decently well. It's at least held sideways. The problem is if you started trading the strategy anywhere around here, you're still in the red, and that's trade 840 to trade 960. So that's over 100 trades. Where again, if you would have traded at the worst period of time, which is right here, you'd still be in the red. If you would have caught, Bitcoin maybe at one of these moments down here, you might be in the green or about break even. If you would have started trading the strategy a while ago, most places would actually be in the green now. But for all of this time that's passed, I mean, even if you started trading way back here at trade 777, you right now would still be about at break even, which is a lot of trading for really no returns. And that's the risk that you take, right, when you're trading anything, especially trading strategies. Now, the upside of trading strategies, over holding them, is when Bitcoin is consolidating, going sideways, having low periods of volatility, the strategy will absolutely make tremendous gains over those periods of time. If you have a good strategy, it might even be able to make some gains during the downside. Again, this strategy was built on data that had this bear market and did pretty well during the bear market. As you can see, though, it did not do well over here during periods of high volatility, and that's kind of what we've had right here. So you kind of have to think about what you're expecting when building a trading strategy. That is something I'd never thought about for the longest time when I was building strategies. So, for example, here's an old strategy that I built quite a while ago, and I finished the strategy and I thought, man, look at that. It just goes up and to the right for most of the period of Bitcoin. This is great. I'm going to put some money, some capital into this strategy. And for a little bit, I made some gains, but let's look at the recent history of this particular strategy. And this was when I was still learning how to build strategies and what I was doing. So what happened here? Bitcoin has had a general period, like I've said, of slow down and to the right. The strategy has actually done worse than Bitcoin over this period of time. Now, it's a lower time frame strategy, 15 minutes, so you can expect that it actually will do a bit worse. That's the thing with lower time frames. They do better with quick moves to the upside. They'll make more gains, but with quick moves to the downside, they'll also lose more gains. So what I was doing is I was trading the strategy and all of a sudden hit some losses here, right? And so I thought like, hey, I just hit some losses, don't want to make more losses, so I turned my strategy off. Then over the next few days, week or so, strategy recovers, and I think, man, I missed some opportunities. Turn the strategy back on. What happens soon after that? Makes a little bit of gain, all of a sudden down more. Then I get freaked out again, turn the strategy off, makes more gains. One more time, I think, man, I'm missing these gains. Maybe the period of downside's over, turn it back on, and just goes down more. So not only did I not make the gains to the upside, I only caught the moves to the downside. So then my account was super in the red. And this was when I, was still learning how to trade strategies. First of all, I was trading more than I should have. And this is a general example of what you don't want to start doing right when you finish a strategy or right when you start trading a strategy. At least in my opinion, it's not financial advice for you. But it's a risk. You take a risk, and if you don't know and trust the strategy, you generally are a lot more emotional and volatile with it. You can look at many other strategies. This happened to me in the past where built the strategy. I probably finished it, sometime back here, and traded it for a bit, and then it made some gains, and then all of a sudden was losing all those gains. So I freaked out. And this is the thing you have to expect when you're trading strategies that you have not tested. There's going to be volatile times, and if you aren't expecting those times, you're going to trade emotionally and be turning the strategies off and on. You're not going to feel good about trading them. So here's the general rule I learned from this. One is lower time frame strategies. If you are in a period of downside, it's best just to turn them off and leave them off. If you don't trust the strategy, it's kind of like the buy and hold thing. If you're trying to buy and hold Bitcoin, and you buy it around the top, say you bought it around 70K on this last run, now you're in the red still, and you've been in the red for a long time. Unfortunately, those rules still apply to trading strategies where, listen, if you start trading the strategy at the wrong time, you're probably going to be in the red for a bit, and you have to expect that. Now, again, the good thing about strategies over buy and hold is over periods of time, especially good strategies, will make way more gains than even the buy and hold of Bitcoin. Unless you're catching an asset like NVIDIA, which recently just went on its crazy run. Sure, there's a few people that happen to get into NVIDIA at the best time. They got in, a long time ago, and their buy and hold way outpaced strategies. The problem is you have to know what asset is about to go on that run, and if you have that info, of course you're not going to be trading strategies. You're just going to be buy and hold whatever asset is about to go on that run. We don't know that information, and so it is better to trade a strategy that has a slow, steady growth over trying to switch in and out of assets. I mean, again, not financial advice, but for me, I trade strategies. I also do some buy and hold, but I trade strategies because over time, I think they will beat the general buy and hold market. And I want to try to protect my capital in the downwards market. So that's my general philosophy now. I started trading a few more strategies after that. Again, this was probably 6 or 7 or 8 months ago. But once I started learning that, I left strategies going, especially 30-minute or higher term strategies that I trusted. I let them go, and I think this is that's one I've not finished yet. This is one of them. So like this strategy, I started trading back here at some point, right? And so I made some gains, and then all of a sudden lost all those gains. Gritted my teeth, let the strategy go, and what happened? It eventually recovered, kept growing. So now I'm a few 100% in profit on this particular strategy I've built. And again, recently it's gone through some volatile times where I used to, be more in profit. If I would have started trading the strategy right here, I would still be in the red, and that's 940 to 967. That's still a while, a lot of trades to be in the red. There are times in the past where the strategy has gone hundreds and hundreds of trades where if I would have, you never know where you're going to start trading a strategy, you never know where the market's at. If I would have started trading it right here, it would have taken hundreds of trades for me to eventually recover. And so that's where a lot of mental mind games come into play. And if you don't trust a strategy, it's best just to turn off and leave it off until you do start trusting it. So say, it went down. Even if I would have left it off for months and eventually said, okay, after months of trading, the strategy has proven itself, I'll turn it back on somewhere in here. Eventually, it's up and to the right again. I'm good. But trying to turn strategies on and off during the volatile times will just make you lose more and more money, or it runs the risk of that. Okay, so now that we've gone through all of that, let's go into generally the things I look for when building a strategy. One would be simplicity. If you're using a bunch of different indicators, you're probably over optimizing. And the reason for that is you can see over time, it's better on this Bitcoin chart right here. You can see over time there are major dump offs in Bitcoin, right? It's these major downsides that are dangerous, because I could find some specific setting on some specific indicator that would probably cut out this trade. Now, it would cut off some other trades, but that trade in and of itself was a huge downside. And so if I get rid of that by over optimizing, yeah, sure, in the backtest history, it's got rid of that one trade or a few trades around that area, but that doesn't promise that it's going to get rid of all future trades. Because say I do something that's like takes the time between that trade was done on a Tuesday between 1 o'clock and 3 o'clock. So say I take off all Tuesdays between 1 o'clock and 3 o'clock. Well, great. That took off that one. Maybe it actually happens to do great and take another. Maybe it also gets rid of that one. It doesn't mean that in the future, between 1 and 2 o'clock on Tuesdays, it's going to avoid, maybe it's at 5 o'clock on Tuesday that the next big dump happens, and you don't avoid that in the future. So you've over optimized your strategy. So I would rather see a strategy have actually some crazy dips in it and still be profitable, because then you know, hey, this strategy can take some hits, but over time it will be more profitable. And so we do that by just not over optimizing um, the strategy and the indicator. So say on this strategy I'm using BBWP, I could put in a really specific like look back of say 213 or 31, sorry, 200 say 213, and then I use WMA and I use high. I'm really optimizing. Like say I go through a bunch of numbers and I find that this one specific setting all of a sudden makes my strategy look magical. But if I change this to 200, all of a sudden the strategy looks like crap. Or if I change this to close, all of a sudden the strategy looks like garbage. If you make one or two small changes and it makes the strategy go from really profitable to really garbage, that means you're over optimizing. The strategy you should be able to change numbers within a window and it still be profitable and still look good. Maybe, sure, there's a specific setting that looks a little bit better, and so we can leave it on that one. But if it's like a huge cliff between one number and the next number, that means you're over optimizing. So let's go into a little bit more detail here. So right now it's just BBWP with a threshold. And I found for my bumper bands indicators, BBWP threshold and slope are huge helpers in really fine-tuning a strategy and not over-optimizing. Another thing that you want to look for is number of trades. And if you're only seeing a few hundred trades per your strategy, especially, I mean, it kind of depends on how many bars you're looking at, but say you're only getting a few hundred trades results, but the results look great, that means you're way over optimized. Now, again, I have a high tier on TradingView, so I'm seeing more backtest history. The list of trades you can see, it starts at 2022, so this is over a 2.5-year period. I'm seeing about 900 trades. But that's still, every year, that's still hundreds of trades going on. So that's, one thing to kind of watch for is, hey, am I cutting out so many trades that it's, yeah, sure, it's avoiding all of these dump offs, but in the trade, if I have a couple losing trades, because I only have a few hundred trades, those couple losing trades will take my capital down by a huge percent. That just means you're, again, over optimized, cutting out way too many trades. So yeah, a strategy like this, specifically for bumper bands, just using some really general things to start with. All right, another really important part of a trading strategy is risk and stop loss. Now, it's important to know that max stop loss is a very important part of a trading strategy. However, there are times where even if you have a max stop loss set very reasonably, say you have it set at 2%, and you're limiting it, and you're saying like, okay, I want to make sure I protect my capital. In a black swan event, I want to make sure that my stop loss gets hit and I don't get liquidated. Great, that's a good thing. But the problem with that is it all of a sudden ruins your results of your strategy. So sure, if a black swan event happens, you get out of the trade. But the problem is, over a period of time, you can actually lose just as much capital as you would have in that black swan event, because it keeps hitting your stop loss. So the thing that I found with stop losses is you have to find the risk that's worth it for you, and you have to know that that is a possibility of being reality. So say I set my stop loss at 12, and it's not even a limit stop loss. So that means if in a crazy black swan event it drops 15% in one bar, it's not even going to be limited. I'm going to lose whatever in one bar it drops. I have the possibility of losing that. And there are trades you can see in the past where it really takes some major hits. The upside to that for me is knowing that it has a wide range. And the thing with the bumper bands, generally, um, they will find a spot. Again, this is not always not financial advice, but they will find a spot to exit. That sure you might take a loss, but say you had a stop loss down here, and inevitably what's happened to me when I've used tight stop losses is it hits the stop loss and then price bounces after that, and you could have gotten out at a much better price. That like inevitably happens so many times where risk will sometimes hit a stop loss and then bounce. Again, there are other times where it hits the stop loss and keeps going. So I have found, for me personally, using this kind of risk, which is the Lex Algo risk, is a lot more productive because it finds the wicks, right? It's looking at the closing bars and or the wicks, depends on how you have it set. And so it's closing a lot more based on support and resistance than a general percent. So that's kind of the way I think about risk. But again, there is going to be a trade at some point in my trading um, future where it's probably going to hit a bigger stop loss than I want it to, and I'm just going to have to be comfortable with that. Now, the hope is I've gained enough capital over time that, yes, while it hurts in the moment, and you can see back here even, there's a huge drop in price right there, where if I would have started trading anywhere in here, all of a sudden would be in the red for a long time. But again, it's about trusting the strategy and trusting that over time, it's going to make back the gains. But to each their own. And I'm not, again, I'm not going to give you financial advice on what to trust, when to trust it. You just have to trade an amount that you're comfortable with and a strategy you're comfortable with. But these are kind of how I think about trading my strategies now. Yeah, so that's the general overview of this video. I do need to make another video real soon. I actually got to run, but I need to make a video real soon about how exactly I build a strategy start to finish as far as settings of BBWP and settings of the bumper bands and everything. I'll actually do a strategy where I start to finish, record the whole entire thing. Sometimes it takes me half a day, a full day, sometimes days, or even a week to build a strategy. And so maybe I'll get lucky and build one in a shorter period of time, but I'll definitely have to chop the video up and make some more clips out of it, because yeah, trading a strategy or building a trading strategy for me it just takes a long time, testing a lot of things, back testing. And so that's another important thing I'll touch on in the future is I will generally find trading ranges. So I'll look at my current as I'm building it, even I'll look at what numbers of, say that I'm looking at BBWP length. I'll look at 13, 15, look at a few other things for this current period of time, and then I'll look at other periods of time in the past and make sure that the number I land on is actually better for all those periods of time. So I kind of will try to not look at an isolated period of time, but lots of different periods. So, all right, if you guys have any questions, you can leave them in the comments section below. There will also be a link to these trading indicators here, which are the bumper bands. If you want to check out a subscription to these, I have a Discord where I share all the info about them and some trading strategies that I personally trade and have been really profitable for me as I've been trading them. So hope you guys stay safe out there, and talk soon.